A huge Wall Street financial firm is now predicting that we are going to have an economic crisis by June of this year.
We'll absolutely have a recession in 2025.
But it's not just an economic recession they're warning about. They're saying that we are going to experience something very similar to what we saw during March, April, May of 2020 when you went to the stores and there was nothing there. I'm going to explain the details of what they're actually predicting, and I'm going to explain how I think it's going to play out in 3 simple, fast steps. Step number 1, let's go over this supply shock, because they are saying that we will likely see this by June of this year. Just to reiterate, the quote that they're using is the shelves will be empty. So this chart goes all the way back to 2017 to 2023. On the left, we go from 0% up to 9%. This is CPI. So I want to start with this because, yes, if we do have a supply shock, it will mean that you go to the grocery store, just like we all remember in 2020, and only half of the shelf space will be occupied by stuff. But what else did we have in 2020, 2021, and into 2022? That would be massive consumer price inflation. So we go back to 2017, we're right around, let's say 2%, and it kind of trends down. Remember, the Fed was trying to get inflation up to their 2% target. They kind of do that in 2018. I think Jerome Powell's raising rates here. But you guys know what happened during the cerveza sickness. We initially had this huge demand shock, which brought inflation down, but then it was followed up with a supply shock that took prices all the way up to 9.1%, if you believe the CPI. Shout out to my good buddy Jason Burrick there. If you believe the CPI, it took prices to 9.1% in the summer of 2022. Now, before we go any further, I know a lot of you are probably saying, okay, George, well, this is just maybe some random person, some talking head on CNBC. What does he matter? He probably has a political agenda. Not really. This guy represents Apollo Group, which is basically just a $700 billion BlackRock. They are a huge, huge Wall Street firm. They've been doing this since 1990, and they came out with an extensive report on how they see this actually playing out over the next couple months. More on that in just a moment, but I want to be crystal clear. This is not about just predicting a supply shock. It's also predicting a demand shock where we will see a recession, if not something worse, play out in 2025. And it's not George Gammon saying this. I'm not doing this video saying that this is my prediction. I'm saying this is their prediction. I'm going to explain it first, and then in step number 3, I'll give you my assessment of their prediction and tell you what I think is going to happen in terms of a supply shock, a demand shock, and probably most importantly, consumer price inflation. Step number 2. Now let's go into the details of this report from Apollo Group to try to determine why on earth they're giving us such dire warnings that we're going straight back to the type of, let's just say, economic environment we had during the cerveza sickness. So this is their 40-page report. We're not going to go over everything here, but we're going to go over kind of the key talking points and then go over some of the charts. They're not just saying this to say it. I can assure you, this is very well thought out. So anecdotes from this past week. Southwest Airlines, I don't care if you call it a recession or not. In the industry, it's a recession. And this was CEO Robert Jordan. Chipotle, saving money because of concerns around the economy was the overwhelming reason consumers were reducing the frequency of their restaurant visits. Now, I want to highlight the author that was on CNBC that we showed earlier, and we're going to go back to another clip here of him discussing this in a moment. He was talking about this through the lens of tariffs, but it's not just the tariffs, because what these CEOs are talking about predated, call it Liberation Day. So the economy was going down, and it was slowing down, it was starting to contract, and then on top of that, we got the tariffs, which were the disruption. But I think the tariffs, if we do see a recession, the tariffs are the straw that broke the camel's back. The underlying fundamentals of the economy were unsound even prior to Donald Trump. PepsiCo, relative to where we were 3 months ago, we probably aren't feeling as good about the consumer now. That's an understatement. So here's a broad overview of why they're predicting that we're going to be in this economic crisis by June of 2025. And again, that's not George Gammon saying this. I'm just repeating what this report from the Apollo Group is outlining. So they're calling this the voluntary trade reset recession. April 2nd, Liberation Day, the tariffs come out. Container departures from China to the United States start slowing rapidly, as you would imagine. So 20 to 40 days container ship transit time. That takes us to early May, mid-May. Container ships to U.S. ports come to a stop. And then you include the 1 to 10 days truck and rail transit times to cities. This takes us to call it late May. Truck demand comes to a halt. In other words, trucking transit. Then this leads to empty shelves and companies respond to lower sales. This takes us late May, early June, and this is where companies respond to those lower sales because they have a lot less stuff to sell with layoffs in trucking and the retail industry. And this is why they're making such an extreme forecast of recession and empty shelves in the summer of 2025. But to hear it in his own words, one of the authors of this report, editor, let's cut right to the internet.
The issue is that tariffs of this magnitude on China is having a very significant impact on small businesses. Large businesses can pay the extra cost because when goods come from China to Los Angeles, then of course you have to pay now a higher tariff. Large companies have the resources and the working capital to deal with that. But small businesses do not have the working capital. They basically do not have money and cash to pay 145% extra. So we will have bankruptcies of retailers of very significant magnitudes if this is allowed to continue. Small businesses make up 80% of total employment, meaning in companies of less than 500 workers, and they make up 80% of CapEx. So we spend too much time talking about this in P500. It really is the small businesses that are the most negatively impacted as a result of this. So yes, we will begin to see a serious negative hit on the economy if these tariffs stay in place.
Okay, let's get back to the report. They say, how are firms responding to tariffs? And I would rephrase that and say, how are firms responding to the weakening economy that we had before the tariffs, which the tariffs just made even worse. Rapid downward revisions to earning expectations, new orders falling, CapEx plans falling, inventories rising before tariffs, which means an inventory glut, which means they've got to drop prices just to get rid of that inventory because they don't want to have the storage cost of keeping it over the long term. And now they get to the specific data in the charts, which I can really appreciate. So this is a chart showing sharpest decline in earnings outlook since 2020. Next one, new orders are collapsing, is manufacturing. Sharp reversal in corporate CapEx spending plans. Cost pressures increasing, prices paid rising. Now these are from the manufacturers themselves, and so what's going to happen here is if their costs are increasing, they're going to try to pass that on to the consumer, but wages aren't going to be going up because the unemployment rate is obviously going to be going up. You have a glut in labor, and therefore the consumer isn't going to be able to afford those higher prices, and that's going to lead to the manufacturers dropping their prices after they raise them and then laying off workers. New orders in contraction territory in March will decline further in April. Inventories rising rapidly. We just talked about that. CEO confidence declining. And I'd like to point out this is a bigger decline than we saw during the cerveza sickness. China, U.S. trade coming to a stop. This is the container ship count departures from China to the United States. No surprise there. So how are consumers responding? Consumer confidence at record low levels, front-loading purchases before tariffs begin, tourism slowing, in particular international. And this is all true, but is this exclusively a result of the tariffs, or did we see these trends before Donald Trump even took office in January? And I would argue the trends were already in place. So they start off with a chart in this section of the report where it shows consumer sentiment declining across income groups. Consumers very worried about losing their jobs. Look at that spike. Again, it's higher than what we saw during the cerveza sickness. Record high share of consumers think business conditions are worsening. And this is higher than the cerveza sickness, higher than the GFC, higher than any time going all the way back to 1980. And I'd like to point out that usually the soft data with the labor market is a leading indicator for the hard data, because the people being surveyed have better insights as to what is really happening with job opportunities in advance of the people that are taking the survey, or in advance of the unemployment rate actually going up. And here's another just shocking chart. I mean, they're all really quite jaw-dropping, but this one in particular, the share of credit card accounts only making the minimum payment is rising. And I did a live stream the other day where I talked about another article I saw on CNBC that shows that the number of Americans that are buying their groceries with a buy now, pay later loan is increasing rapidly as well. And then we see delinquency rates rising in credit cards, and they conclude the charts by showing a decline in cash purchases of homes. And finally, they go ahead and outline 4 different types of scenarios. They've got stagflation, overheating, recession, and Goldilocks. And what they're circling as the highest probability is stagflation. And this is actually where I would disagree with the Apollo group. And we're going to go into why right now. Step number 3. So if this bombshell report from Apollo is actually accurate, what are we going to see? Are we going to see that stagflation they talked about in step number 2? Are we just going to see inflation, deflation, disinflation, stagnation? Well, here is my base case as to how this plays out, assuming that report is accurate. Again, no certainties, only probabilities. So here we go. Average Joe right there in the middle. Average Joe is making $150 a month, okay? And he's shopping at Walmart and, let's say, Southwest Airlines. So currently there are 100 items of widgets coming into Walmart from China at a cost of $1 per widget. Now let's assume that Joe has to buy all 100 items, these are the things he needs, from Walmart every single month at $1 a piece. I guess there's no spread here, but you guys can use your imagination. I should have charged maybe 75 cents here or something. But there's a spread. But the bottom line is the average Joe is spending $100 a month at Walmart. But that gives him an extra $50 a month to spend at Southwest Airlines. So he can buy 5 plane tickets at $10 each. And going back to that spread that I forgot to put in here, we'll say that Walmart makes $10 from selling these 100 items to Joe. Okay, got it. Now, what happens if what they're saying in this report actually comes to fruition? This crisis in June, the supply shock. That means that China, the widget makers there, are going to choose to send fewer goods to Walmart. Well, this makes a lot of sense, because if you're that widget maker, why on earth would you send things to the United States when there's 100 and, let's just say, 50% tariff? So they're going to reduce the amount of stuff that is coming to the United States, because they're either going to just not make it or they're going to sell it somewhere else. But remember, when it comes into Walmart, they're going to charge the average Joe, let's say $3, because of that tariff. Again, these aren't exact percentages, just using basic numbers for the sake of the example. So that means that Walmart is only going to sell 50 items to Joe. So what's the first thing that happens is their revenue goes from $10 down to $5. More on that in just a moment. But what happens is Joe only gets 50 items where he needs 100. But you see, he spent the entire $150 of his monthly income to buy the 50 things at Walmart. So he still needs another 50 things. Or in this case, he's just going to have to do without. But it's not just the additional 50 items that he was buying from Walmart that he's going to have to do without. It's also those airline tickets because he's got $0 left. So what is this going to do to Southwest Airlines revenue? Well, it's exactly what we saw the CEO come out and discuss the other day on CNBC, where he says, I don't care what you call the economy. I don't care if you want to say it's in a recession or not. The bottom line is the airline industry is absolutely unequivocally in recession. And then other reports from CNBC came out and said that they're actually reducing the price of airline tickets because demand is so weak. So at a certain point, they can only reduce airline prices so much. There's just not enough demand. They're going to have to fire the workers they can, try to consolidate as much as possible. Well, that increases the unemployment rate. But remember, Walmart's going to have to do the exact same thing because their revenues went from $10 to $5, even though they're still selling things to the average Joe. So at a certain point, Walmart increases their price per item to $3, but then they're going to have to reduce this to, let's say, $2.50. They're going to have to reduce their margins. They're going to have to eat some of that cost. So then what happens is their $5 in revenue goes down to, let's just say, $3 in revenue. So here's the step-by-step process as to how this works, in my view. First and foremost, you probably do see consumer price inflation in a lot of goods, especially the things that obviously are usually imported from China, the stuff you buy at Walmart, Home Depot, Target, etc. That is this price increase that we see here. But at a certain point, they raise their prices to the point where they can't raise them anymore. And due to the lack of aggregate demand in other areas in the economy, such as airline tickets, unemployment goes up, which makes Walmart reduce their prices down from the $3. So what you have is initial consumer price inflation on the stuff that's coming in, what's being imported. Now, does that increase the overall basket of goods and services? I don't know, because prices are going to be decreasing over here because the consumer, in this case the average Joe, is robbing Peter to pay Paul. But at a certain point in this process, you get disinflation, and you might even get outright deflation if we see the economy slow down to the degree to which we saw, let's say, in 2009, which takes me to my last point here. All of this equals an economic contraction, said another way, a recession. So I don't think that this is stagflation, because stagflation would imply that the CPI is just going higher and higher and higher and higher. And even if we do see that initial bump, I think they'll flatline and then come right back down. And that's if we even see that initial bump in the aggregate basket of goods and services. But where I absolutely do agree with Apollo is all of this would definitely lead to a recession, if not something worse. Hey guys, I'd like to personally invite each and every one of you to attend this year's Rebel Capitalist Live. This is the incredible conference I put on annually that helps you build a bulletproof portfolio. It helps you increase your personal freedom and liberty, and also it helps you increase the size of your network. In other words, you get to meet a lot of like-minded individuals, fellow Rebel Capitalists. It's in Orlando, May 23rd through the 25th. Past speakers have included people like Robert Kiyosaki, Ron Paul, Peter Schiff, Mike Maloney, Lynn Alden, just to name a few. So to get your tickets ASAP and to find out who is speaking at this year's Rebel Capitalist Live, you can check it out at rebelcapitalistlive.com. And just a little quick insider information, if you get your tickets sooner than later, you can get a discount, because as we get closer and closer to the event, the tickets go up in price. So don't wait. Go to rebelcapitalistlive.com right now and get your tickets, and I will see you in Orlando, May 23rd through the 25th.